Last month's close of the ES has done something massive and no one is talking about it. However, there is a huge but to this development too. Like every coin, this story of the S&P 500 has two sides. So stick around until the end of the video to find out, first of all, how bullish last month's close really is. Why, secondly, in my opinion, many people will lose a lot of money. And thirdly, how you can make sure you are not one of them. So welcome everyone, and let's jump right into the charts. Looking at the monthly chart of the S&P 500 here, we are focusing in on the candle of March, which closed at a price of $4,137.75. April with that did not only start a new quarter, it also broke the long-term monthly downtrend on the S&P 500. This is absolutely massive and no one is talking about it. So are the lows for the S&P 500 definitely in? The charts communicate a clear message. In the 11 times that this happened since 1998, the lows always indeed were in. Yet, today the world is in turmoil and we are at the brink of a recession. So could it really be different this time? Let's have a closer look at the facts in the chart to get a better feeling for what we might want to prepare for and what we can expect to happen over the next couple of months. So let's dissect each monthly downtrend, starting with the crash in December 2000 and see what happened once these monthly downtrends were broken. Looking at our first example here, we can see that the monthly downtrend was confirmed officially in December 2000. What followed were lower highs over lower highs and lower highs that really couldn't be broken until November 2002. December being the first month that confirmed a new monthly uptrend. What followed is obvious. Not only did a massive uptrend follow, it was an uptrend that didn't just last for months, it lasted for years. Moving forward, we can also see that even within this massive uptrend, we had several smaller monthly downtrends, or you might want to call them consolidations or pullbacks. Let's mark them out using red to differentiate a little bit. First one being confirmed here at the end of July. So in August 2004, then we have another one here and another example being confirmed in October 2005. Nonetheless, in the bigger picture, these downtrends were basically massive shakeouts. And if you look at the reinforced uptrends, monthly uptrends, you see that each time this happened, the lows were in. Never to be broken again for years to come. Moving forward, I have already marked out following occasions and we can see that the patterns basically repeat. We have smaller monthly downtrends that basically end up being massive shakeouts, and it always holds true that the low that is put in once the new monthly uptrend is confirmed is a low that holds for months or even years. Here, with the dotted line, you see the COVID crash, which basically I would call an outlier. But nonetheless, once this new monthly uptrend was confirmed in August of 2020, if you just simply bought in, you would have made massive profits. Which basically brings us back to the beginning of the video and the downtrend that started in officially April 2022, and which we have now officially also bigger picture broken with this candle of March. The monthly uptrend as such however, had already been confirmed in February. And even with the results of our analysis here being that obvious and crystal clear, I still believe that many people are going to lose a lot of money over the months to come. To understand why I believe that is, let's have a look at the overall results. I noted them all down for you. So yes, it is true. Once a monthly downtrend is broken, the lows are in. This is true for all 11 occasions we can find in the chart since 1998. However, the pullbacks that follow can be vicious and leave people broken and left behind. Let me give you some examples. To illustrate better what I mean, I've switched the chart here to the weekly. And if we then take our fib retracement and pull it up from the absolute low to the top of the first move up that established our new monthly uptrend, we can see that we retraced 88.6% of the first move up, meaning retraced to the 0.886 fib level. In other words, that means our first move up was about 25%. Nonetheless, we gave back 17.5% of this move. And if you look at the examples that followed, you can see that this unfortunately is not an exception, but the norm. 61% of the move being given back. And we can do the same again from here. We broke it. Gave back 61%, even with the next one. If we pull it all the way up here, take it from here, again 61% of this first move up of the new bull given back. Looking at our table again, we can therefore see that at minimum we gave back 25% of the first up move in the new bull market. So where does that leave us now? Going back to the chart and looking at our current occasion, we see that we have already pulled back overall from bottom to top. We have already given back half of this move, but don't forget, many lows being unattacked so far. I'm not too sure that all of the liquidity resting underneath of these lows is gonna stay there. So who's to say that we can't push up a little bit further, fill in this weekly fair value gap, and then have our pullback maybe down to the 618 or even further. If we know that nasty pullbacks in these scenarios are rather the norm than the exception, then we have to prepare for them. However, once they come, we should not listen to the doomers or gloomers, because they will be out there. They will scream that 3,000 are gonna come. No, this is gonna be a massive opportunity for the longer term, and it is coming your way. Just look at the overall results. The S&P has a hit rate of 100% with nasty pullbacks of around 25 to 88%. However, this is also true, by the way, for the Nasdaq or Bitcoin, with 9 cases that were turning out that way out of 11 occasions in the Nasdaq, meaning 82% hit rate. And with Bitcoin, we have 5 broken monthly downtrends since 2010, and still 4 cases. In 4 cases, the lows were in, meaning that even here we have an 80% hit rate. Be prepared for this to happen, and then to load up on Nasdaq, S&P 500 or Bitcoin. However, there's one caveat, one thing you really have to be careful about what I've just told you. Before we go into details here, what is your take? Is it different this time, or are the lows definitely in? And how are you positioned? Comment below. Now to what I mean. You are looking at the futures contract here. However, if we switch to the normal stock indice and we go back to the monthly chart, then we see that yes, again, we did establish a new monthly uptrend. The bigger picture monthly downtrend, however, remains unbroken. Secondly, remember all the liquidity sitting underneath these lows not having been attacked so far. Both things make me believe that we might indeed still see a deeper pullback down to the region of around 3,760. And moving back to the ES, this lines up very nicely with what a weekly target box. Hopefully you could find a lot of value in my video here today, and if you did, don't forget to like and subscribe. And with that, I say goodbye and see you soon.